Hello everybody, welcome to this edition of Ask the Experts for August 2. My name is Capolingua, I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be with you as we delve into the depths of your portfolio, pull out hopefully some potential winners, maybe get rid of some of the duds there, and maybe look at some of the ones you're interested in. Apart from that, it's over to you. Let's get your portfolio questions answered, technicals and fundamentals where possible. Heading over for the first one. First in best dress today is James with Audinate. James, hey, let's do Audinate after we have a quick look at the ASX 200. Might as well start off big picture and then we'll drill down. So we're looking at the most amazing rally from 64.07 up until just about 7,000. Topping out a little bit here underneath the long-term downtrend zones. That's a dark pink zone. That's my 144, 233 exponential moving averages. Very important you use exponential moving averages, not those boring old simple ones, because exponential moving averages, just the maths, makes them react faster to the price action. Moving averages are a very slow technical analysis tool, so anything we can do to make them faster is going to be better for us as analysts. Something I'm noting here is these nice big white candles. You can see this one here on the, what's that there, the 20th, and then some follow through here on the 28th and the 29th. Incidentally, when you do see these big white candles and you see a cluster of small candles, small whites, lower shadows, and then the big whites, we call this the demand side control pattern. Very, very powerful pattern. Tells us there's very little supply in the system. So you have the big run up, you have a very shallow pullback, very little supply in the system, demand's holding firm, taking a bit of a breather until another catalyst occurs to get demand back in the system. And in that supply vacuum, up we go. You can see not a lot of volume in comparison, say, if you go back through this period here, maybe 20-30% more volume. So we're at a subdued volume. All that means to me is that there is very little supply in the market at the moment, consistent with the candles, and we're kind of just waiting for where that supply might rear its ugly head. My guess is somewhere in here, and maybe even today's a little bit of that black smudge there, maybe a bit of supply coming in. In terms of risk reward, I think this is the point here. Now, we didn't know it was the bottom down at 64.07. I put my hand up and say I had no clue that that was going to be the bottom. And then we have obviously a little bit of a rally around here. I expected another leg down in line with this short-term trend impeding upward price action. So I got this last bit pretty wrong, happy to admit that. But if you were able to get in around here and buy a few stocks, not to say that when I said the market was going down, we didn't have stocks that we were interested in buying. There's always stocks to buy in any downtrend, but just fewer of them. I think from your reward to risk perspective, you've had the big drop, and if you get a bounce, okay, up we go again. I think in terms of reward to risk, we're higher. We're closer potentially to a topping out point than clearly we are to the bottom. So I think you just want to cool it a little bit. I'm not saying you have to sell everything, quite the opposite. It's more of a hold, a wait and see, because the next indication could be through this zone and back to the upside to test 72.89. If we start to see some black candles popping in here, upper shadows, they're the killers. We call them supply side candles, so black candles, black bodies, upper shadows, then that would indicate, hey, we found the supply, there it is. Remember, market's always probing, finding where demand is, finding where supply is, and that's what we're trying to do. If we do see those black candles, we might then see a retracement back to 67, 64, or anywhere around where these white candles start. So a little bit of a potential inflection point here, but certainly not one where I'd say you've got to act, dramatically one way or the other. Let's have a look at Audinate. For James, one of the favourites obviously in these sessions. We picked it up, I reckon, in these sessions we started looking at it somewhere around here on these two candles. I'm pretty sure if you managed to get in around there, you've done very well, congratulations. What do we do now? And I think many of you can answer this question yourselves. We know what happens around these big round numbers, and $10 is literally it's about as round as you can get, isn't it? With a 1 and a 0 and a 0 and a 0 there. So my gut feel would be to start to take some profits here. And I think you don't have to throw everything out here. This idea we refer to often of managing our exit. We've had a pretty good run. I like to do them in 1/3, so 1/3 entries, 1/3 exits. I find work pretty well, and we're knocking it out. There's a couple of little shadows there as well to the upside. James, you'll notice, I'm sure you've noticed that little upper shadow there, indicating that as we move into that $10 level, there's some supply in the system. Why is there supply in the system? Well, I reckon some people, how about that? Look at that. Some people bought it at $5. Some very, very clever, maybe very lucky people. That low there, $4.99, everyone. How about that? $4.99. So if you... every time I say, hey, there's these things in the markets called round numbers, and we have to watch out for them. And you said, no, Carl, this car guy, he's on something. He's mad. He's mental to think that round numbers mean anything. How can markets are smarter than that. Markets trade on earnings and fundamentals and macroeconomic factors. Why would round numbers have anything to do? That guy's he's crazy. Well, here we go. $5 is the low, and then we double it, don't we? So yeah, there were some people who got in at 5, and I tell you what, if you said to them on that day, would you take 10? They'd say, absolutely, I would. And some of them are doing it. Not all of them are doing it, okay? Not everybody got in at that level, but I would suggest to you, looking at those candles, as we push in that shadow, that upper shadow is telling us that supplies to the system, they're pushing us back down. That's telling you that at least some of them are taking profits. And if some of them take profits and cause a bit of a pullback, then more of them might take profits. And then that's how tops begin. We certainly saw a little bit here, just above 10 before. And to be fair, I reckon all of this is to do with 10 over here. So I think sensible thing, take a little bit of profit there, hang on to part of the position. Why? Because we've got this wonderful trend. Look how wonderful this trend is. Look how wonderful these candles are. Gaps to the upside. All good stuff. But I think let's pat ourselves on the back a little bit there and take some money off the table on that one. And I know, the fundamentals, you're going to say, oh, the Audinate, its fundamentals are fantastic, and it's one of those industry standards. Well, that's all talk to me. I prefer to look at the demand and supply interaction on the chart. So what we're doing here, we've got the Refinitiv Icon tool, and we're going to see a lot of stuff not working because we're at negative earnings here. So I can't really do a fundamental reader for you on Audinate because this spreadsheet needs some earnings to make that happen, positive earnings. So we might skip past that one, but if you were wondering, the first profit is expected in FY 2024, and Audinate is trading at a very modest 263 times that year's earnings. Okay, that's optimism at its absolute best, and it's making me feel like taking some profit here is an even better idea after looking at that. Next one is for Roberto. He would like to look at BossEnergy, which is one, I must admit, again, got very bearish, you can see, in and around this area, because it really felt to me, as it did with many of these commodity stocks, that they were going through this cycle of breaking through those long-term uptrend zones and moving into long-term downtrends. Now, I'm, again, disappointed to admit, but, prepared, very forthcoming in admitting that for many of these material stocks, it's turned out I was incorrect, that somehow they managed to hang on, and I think got rescued a little bit in the fact that everything else rallied. All right, we went risk on again, and despite commodity prices, let's face it, really getting sold off. They've bounced over the last week, but really getting sold off. A lot of these commodity stocks didn't collapse as I predicted. So I've got a few of those wrong, and this is one of them. Where to for now, I think, is the question. Is the trend so good that we need to be buying? Look, the trend is so much better than last time we looked at it around here, when it was just, in big trouble, breaking through all sorts of demand points. I'd be concerned about this. I think we should expect some natural supply around about 250. Those two peaks are there. It's a fairly round number, and then obviously $3. So we're going to probably talk a lot about this concept today of reward to risk, aren't we? And understanding, well, something might look half decent, but if we were to get in here, how far do we have to go before we might have some troubles in terms of supply points? And if we were to say, well, certainly there's a demand point down there, I think through here is there's clearly some demand. You can see previous supply points. We know they tend to act as demand points in the future, and through here. So I think 2's pretty well supported. And if we then were to measure, say, reward to risk of getting in at the current level, we've probably got that much downside compared to maybe we're going to have a little bit of a struggle in here. So whilst I can see the short-term trend picking up, I can see price action doing pretty well as well. So when I talk about price action in these sessions, this is what I'm referring to, the peaks and troughs. And ideally we see something that looks like this, okay, because it indicates some really strong demand in the system. So here's your where demand is active, where demand is in control. I mean, demand's in control pretty much for the whole bit, but we can see supply is more active here, right? We can see supply is in control here, okay, through these small pullbacks. So we're really measuring on a relative basis the interaction between demand and supply over a period of time now, whereas candles are kind of measuring it one day at a time. So you can see, for example, how much demand is in control compared to supply. All right, so we obviously want to see the demand control zones much larger than the supply control zones. And another little rule of thumb, or I guess proof of that, is that you will tend to find that the last trough, okay, so if we call this trough 1, and we call this peak 1, and then we call this peak 2, and naturally in here will be trough 2. We say that the last trough 1, is at or above the second from last peak. Okay, so that is giving us this clearance. Let's move that out of the way. That is giving us this clearance here, and this is what we classify as good price action. Okay, so whenever you see this, you have got a very strong demand side and a very weak supply side, and that is 2 ticks. I wouldn't say the opposite, but what we don't want to see is when you have price action, which is very much overlapping. You can see a lot of that on screen, to be fair, because it's where demand and supply are far more equal. Okay, so long story short, I know we've done a bit of background stuff. It's important to get this background out of the way for the rest of the presentation, because so we don't have to do it over and over again. But I would suggest that BossEnergy, whilst I can get to a hold on the basis of the price action, the improving candles, the improving trends, the fact we're above the long-term trend zone, on the basis of reward to risk, I don't think I can get to a buy at this stage. Okay, I'm not sure if that's going to be the best chart we're going to see. I don't think that's why Roberto asked about it. I think Roberto is asking more about it because he probably still got it, which is fair enough. Uranium, true believer, and is probably wondering, well, more how does it look now, Carl? How are we going? PNV, this is one we followed pretty closely. We hoped it was going to get going. It hasn't, unfortunately. This is from Anonymous, but I know many people are following this one. Is it worth holding? Is it worth holding? Is it worth adding to? Or is it worth maybe getting out and saying, you know what, it hasn't really done exactly what we hoped it would, and therefore we should be quite cautious. And yeah, I think there's some concerns here. I mean, this big black candle here is my greatest concern. Because in a strong uptrend where demand is overwhelming supply, we shouldn't see events like that. That's disturbing, especially when it comes immediately after such a strong demand side signal, and they really do knock my confidence about. So, on this side of that white candle, I've got a very clear understanding of what's happening in the market. You can see the great price action, improving candles. We're above the long-term downtrend zone. We're now using that long-term downtrend zone as dynamic support, no longer dynamic resistance as occurred in the past. So tick, 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 and that's why we liked it. But then something like that occurs. How do we come back from that event? Let's have a look. Let's have a closer look. And supply events, you've heard me say this before, supply events, they're not fun when we're long, but at least they give us some information on what to do next. We get to test demand, we get to test the metal of demand, we get to understand whether demand has got enough guts to keep this thing going. I'm very encouraged by this candle here. I mean, look at the lower shadow, so demand was in the system, it is in dynamic support zone, that's good. This is a bit of a non-event, but this is very good and this is excellent. Okay, so that's great. Now, next thing is we want to get above here pretty quickly, I'd suggest. And from here, it looks like we are struggling. Oh, this is tough. I mean, look, it's so sideways. And I know you really want me to give you these really confident, hey everyone, this is what we have to do on this right now. And I wish I could every time. But hopefully you can see there's some question marks here, both ways in terms of demand and supply. I'm going to give it the benefit of the doubt and say, let's go candle by candle. Let's let Polynovo prove itself a little bit more. This low here, I mean, look at the demand that came in here. What sort of volume, I wonder, did we have on that day? See, not even that much, hardly what you call supply removal. It's just a bit ho-hum, isn't it? What was this day here? More volume there, took out a bunch of demand. Yeah, that's a bit concerning. And then ho-hum here. It's very hard. And nothing in there is giving me a definitive answer one way or the other. Let me make a call for you, because that's why I'm here. I don't want to see it close beneath that level there. I don't want to see this is demand. So that high is 151. Let's go round number here. So let's say we don't want to see it close below 150. As long as it stays above 150 with some nice candles, it's worth a hold. If it starts to get beneath that, I think this is done for the time being. Okay, let's have a look at the fundamentals, see if we've got any valuation there. PNV, I don't think we will. I don't think it's making any money just yet. Waiting for the retrieving. This is a Refinitiv icon from Thomson Reuters, and it gathers all the broker consensus data for forward earnings and historical data, as you can see through here. We can see that there are 6 brokers covering Polynovo, so it's actually fairly well covered, and we have 2 strong buys, 2 buys, 1 hold. They have an average price target of 155, so despite being quite bullish on their rating, the price target is actually below the current price by about 3%, give or take, depending on what the price is trading at right now. We can see that we do expect to have some earnings this financial year, so we do have a valuation on it, and then some very solid earnings growth. You're looking sort of a compound annual growth rate of about 192% over the next 3 financial years. Very impressive growth rate. I tend to go, when I see huge growth rates like that, I tend to say, well, I'm going to, say high. The chances of not hitting that are high. That's what we're saying. And the PE is very high, let's face it. So we're trading at 800 times this year's earnings, 124.57, 32 is great for a growth stock. And if we sort of take a median of those numbers, I think we're coming in sort of in between these two, and that's giving you 91. Would you be prepared to pay 91 times? Some people say, well, Carl, I top out at 80. Carl, I top out at 40. I mean, I'm just giving you some ideas, okay, of where you personally might top out in terms of what you're prepared to pay on a target PE. Even at 40 target PE, it's still looking very cheap, okay? But let us say that with the broker number there, maybe the spreadsheet is struggling a little bit with this huge growth rate. Okay, that's the only thing there, but starting to look pretty cheap there, I'd say, on my valuation. Okay, I'm not sure that helps us a great deal. Hold it until we get below 150 is my suggestion. Faye is asking about Audinate, which we've already done, and she's saying she has set her stop loss every day hovering on sell. Well, I think we've answered that question, Faye. I think probably we do want to sell a little bit. That's just my opinion. Of course, this is general advice. Do what you need to do. We've got from King, looking to get back into RNU, which is Renascor. And this is a great case study, King, because it's so similar to so many charts we're seeing out there right now, where we went from hero, equilibrium phase, isn't it? Demand side, equilibrium, to unfortunately zero. And when I say zero, not back to zero, but certainly not a hero anymore. And we've got this recovery. BossEnergy, another great example. I'll come straight out today and say that my gut says and my experience says that I wouldn't buy these stocks. Okay, those charts, you might see some developing short-term uptrends like this. We might even see some interaction here, but in my experience, this is not a good time to get back in. I think we need to demand so much more of these particular types of setups. I think we want to get better price action in. I think we want to get better candles in. I think we want to see moving averages really ramping back up again, because I look at this and I go, all I see is a huge wall of supply here. in and around that level. Okay, and I see demand sort of around here. And if you look at the recovery and the price action through here, it wasn't particularly convincing. What is convincing demand? This is convincing demand over here. This is what we want to see. Okay, so if I saw something more like this over here, then I'd get more excited. But the angle of the tack, the overlapping in the price action. Now, it could be completely wrong here, and we could move back into the most wonderful bull market of all time on these small mining stocks. But personally, in my experience, which is substantial, take it or leave it, I'm just not going to put these out. So, I do my Twitter shortlist. I haven't done one. I haven't done them consistently over the last few weeks because I only put them out when I really feel strongly about something, and I just haven't felt strongly about anything. I'm seeing a lot of these charts, and I just don't want to trade them. I won't be able to put Renascor into the valuation tool because it won't have any earnings, is my guess. I think we're going to find better things out there. It would be my suggestion. David's asking about WHC, which is one of those better things. We've really stuck with it in these sessions, and hopefully people have done well out of it. I don't expect you to have the entire position because we've talked about managing exits at points in time, but hopefully you've got a little bit left. Do you need to manage your exit today, David? I don't think so. There's a couple of candles in there which aren't fantastic. Let's face it. That one there isn't great, but there's a cluster of black ones in here. I'm not too fussed about those. They're pretty. They're pretty minor in the scheme of things. Again, look at the demand side pulse through here. Let's draw it in green. Green means demand, red meaning potentially supply, and then we've got a really shallow response back the other way, don't we? So I think it's fine. Where might you want to change your mind a little bit? That low there, 595, close beneath that, and potentially you've got this little mini reversal pattern here where you might be doing something like this. So you might be going like this, equilibrium, and then breaking back down again. But that's great. I would just back it. I continue to back it, I think. Let's have a look. I'm curious. I know I haven't done this one for a while. Let's have a look at Whitehaven on the broker consensus tool here. And we can see that we've got earnings per share this year of 191.6, expecting to absolutely explode next year as thermal coal prices, we know, are through the roof. And then brokers, I think quite sensibly, are saying, well, these prices aren't going to stay up here forever. This is one of those classic commodity price cycles, boom and bust, and there's every chance that Whitehaven is going to halve its earnings, in fact more than halve its earnings by FY25. So we've got a compound annual growth rate of around about 20%, minus 20% per annum. I can't say high, low. Look, given they've already factored in the decline, I'd actually go low on that one, I think, because the brokers are kind of doing the right thing there. And then it's a matter of getting the right PE. Obviously, this doesn't make any sense because what this is saying is that a 40 PE, target PE for Whitehaven is probably pretty high because historically, before COVID, it was more like a 13, 14, 15 sort of situation. You can see now it's incredibly low. At about 3 or 4. I'm going to go here and go dynamic. I expect it will change things significantly. So this is the future, looking broker consensus. I think you probably want to maybe go the whole lot. Historical, still pretty high. Yeah, it's tough. When you get such a disconnect, look, I'm not trying to sidestep this one, but clearly there's a disconnect in terms of picking a suitable target PE. What would you pay for a company with negative 20% growth? That's the thing as well. I don't know, it's hard to say. I don't think I'm going to be able to give you a sensible number on this one. If we go, say those, and you can't see down here, but we're trying to get an average, taking out this outlier, we're going to get something around about 8 or 9. So let's go target, and let's go 9. Still looks cheap. It still looks cheap, doesn't it? Even at a PE of 9, it's still looking cheap here. So we've got a chart that is very much bottom left, top right, is very much a picture of demand, and we can't see any reason to sell it, certainly from my valuation perspective. And the brokers, they are 3 strong buys, 9 buys, so they're pretty set on this one as well with 13% upside. So if I'm at say 9.11 and a target of 9, they're at 7.18. Okay, hopefully that gives you a good idea of what to do with that one, David. PDN is the next one. This is another uranium company. It's going to be very similar to BossEnergy. You can see we've done some scratchings on it in the past. No doubt this is roughly where we looked at it in the past, and I said, look, it's looking very, very shaky. And as it turns out, it's almost about faced from there and somehow pulled itself out of the mire. Let's look at the material sector. So just sort of comparing Paladin and Boss and say even RNU to the material sector. You see that's a pretty decent rally there, pretty sharp rally over the same period of time. So I'm sort of talking to this price action here. And of course we do know also that this has been incredible. I mean, it's been such a huge rally on the ASX 200. So I'm just trying to get on a relative basis which one you might want to go for. And to me, Boss looks way better than Paladin, just in terms of the angle of attack. It's response, performance, underperformance compared to the broader index, but it's still in that same basket of I'm just so not interested in these. I cannot express to you my trepidation at getting into these things here. There's just something doesn't feel right about these stocks right now. Okay, and almost can't explain it, and it's just not where I want the price action to be making confident decisions to get in. That's Craig. I don't think we're going to have any earnings on Paladin, Craig, because I don't think they're any closer to production at Langer Heinrich today than they were even 12 months ago. MIN, again, the deep sigh comes from me because I was quite sure that these things were going to crack, and then we get that rally, and I don't want to play. I really don't want to play. This one looks okay. It's better than Paladin. It's better than Boss. Why? Because we've got some nice candles in here. We've got some movement to the upside. This is a fairly shallow pullback. Today's candle's actually quite good if we can close there. Now, obviously, today's candles are live candles, so we have to be very careful about any conclusions we make based upon a live candle. I've just clicked update. From my data provider, I can update at 20 minutes past the hour each hour, so that's working its way through the system now. We'll see that candle has changed. So prior to that was a better white body, and this is the risk. You look at that candle as actually quite a nice candle before that update, and you make a decision, and then by the end of the day it turns into be a black candle. And it's very dangerous to make these decisions on live candles. You have to really make that decision on the close. Now, obviously, I'm here. I've got to make a call one way or the other, but just remind you of that issue. I can get to a hold on this, Faye. I can get to a solid hold. I just don't want to buy it. It's just something is telling me that you don't want to get into these right now. You don't want to. I could be wrong, if you look at this one, are we saying, is this what we're saying? Are we saying that we go copy this, paste this out of this zone? Maybe. Are we saying, well, that's demand, this is all part of a broader equilibrium phase, and we're potentially starting this phase here, where we end up in a global recession for longer than initially expected because of the lingering impacts of the pandemic, central banks doing significant damage. So no, either way, if you're a true believer, I think from a reward risk perspective, it's getting tough here. Where's demand? Let's call this demand down here. And let's say obviously supply of drawn. Let's change this to this. It's absolutely monstrous, the drawing tools on this platform, but I persevere. You know what I mean? It's a tough one. MIN. You might have sensed a complete lack of confidence in my voice this Tuesday compared to, when trends are established to the downside, very confident. When trends are established to the upside, very confident. And if somebody's confident out there right now, then geez, that must be way better than I am. because I can't get that confidence right now. Looking at Mineral Resources, let's say that we are at 216 on their EPS, and this is going to grow anyway, isn't it? So there's a huge contribution from their lithium division coming in. So we do have an excellent compound annual growth rate there. I tend to jack those up when I see those higher rates. Target 9, probably not right, although you know, you can see again huge disconnects in these materials companies. What's the right PE? 50, or is it 7? You know, or is it 6? I don't know. You really are guessing this one. For that, I'd happily pay more than 9. So if it's looking crazy cheap at 9, then it's got to be. You know, if I go any higher, it's only going to get cheaper. The brokers like it 2 strong buys, 7 buys, and 2 holds, and the price target 27% above where it is. So if it's worth anything to you on those metrics, it looks quite cheap. Mineral Resources. Next one is I might just skip that one. I'll just give you a technical on MLX, Faye. Then actually can do it very quickly. And this is more along the lines of what I expected these stocks to do. So finally, you get to see why is Carl so depressed at the moment? You know, stocks, material stocks are rallying. Yes, they're not back at their highs. I mean, many of them are nowhere near their highs, but at least they're heading back up. Surely, this huge revolution in battery metals and all of this demand that's expected in the future, surely that's still going to play out. And this is kind of showing you more of what I expected to happen. So, you know, we come down, we test here, we fail here, and we push down from here, okay? I can't buy this. There's nothing in there to suggest to me that the market is favouring this one over other alternatives. In fact, if anything, the market is still very, very nervous about this one. So I cannot call that a buy. If anything, I'll call it a sell. Washington H. Sold Pattinson looks half decent. I actually, when you look at how clean this price action is, I like this price action. Look at this, it's very clean. We talked earlier on about, you know, last troughs coming in at or above second from last peak. In fact, the second from the last peak is here. So during peaks and troughs, we're looking for higher highs and higher lows for uptrends, and then they switch to lower highs and lower lows for downtrends. And this is how I'm able to define these as our peaks and troughs. And then once you have those, you can define your price action, whether it's any good or not. So we look through here, and we can see that all good. Candles are good. I mean, like, show me the worst candle. Well, show me the worst candle since really this day here. It's pretty solid, isn't it? So this is good. I'm happy to go a hold here. I don't think I want to be a buy. I just think there's too much other stuff going on. I know that's annoying for people because we always want to know what to buy. And here I am not telling you not to buy anything. Here I am telling you, you know what? Just cool it and let's just see how this one turns out a little bit. And if we do, if we go from 7,000 to 7,700 before I tell you to buy anything, then, you know, obviously you'll curse my name. But if that's where we get this clarity and this confidence, then so be it. I think it's a solid hold, but there's got to be issues here. Watch out for the black candles in this zone. What will those black candles look like? They'll look like this. So they'll look like this. Where would they occur? Well, we know they occur in and around here, okay? Don't take my word for it. Look at what the market's done on this in the past. So very, very constructive on this one, but I don't think I want to buy it just yet. CAT, and this one is for Faye again. That's okay. Pretty similar to SOL, isn't it? Faye, very similar in that the price action's good. Bunch of white candles. So this is all good stuff. I wonder where the volume's gone though. Look at that. Just completely evaporated. But yeah, look, it's not the end of the world. We'd like to see a little bit more supply removal because we're in a downtrend. But you know, supply vacuum's okay as well. Problems here. This is where we are. This is what we're dealing with now. That supply zone. Let's change the color on that one for you. So we'll call that supply. Demand zone. Let's go here. And, you know, definitely through there and then through here. So I'm trying to give you idea of reward to risk. Let's look at the next supply zone. So we'll go here and we'll say this is going to be a problem. I've no doubt about it. and then up here, clearly a problem. We can also see, just how well this long-term downtrend zone has performed. Look how well it's performed at defining this trend. Whether it's support through here on the way up, or whether it's determining where we pause and we consider, and then where we fail. So that's your problem going forward, I think, Faye, is that if we were to get in here because we think, Carl said, the price action's starting to look better, the candles are looking good, there's a bit of a supply vacuum, here's your problem point, and this is where demand is. What in terms of reward to risk, we're thinking about, well, where's my exit if it goes wrong, right? And this is, maybe I haven't explained this well enough in these sessions, is that, well, why am I drawing these white things in? Well, if it goes wrong, okay, if we get beneath, say, this demand point, you're going to be probably taking a small loss. If it gets beneath this demand point, there's absolutely no reason to hold it, because, let's face it, the trend can extend horrifically beneath it. So these are your potential lighten points. If you're minus 1/3 there and then minus probably 2/3 there, if this is your risk, then what is your reward? And ideally, our reward is greater than our risk. That's why I'm going through this process here. Let's go back to, and we're not going to get anything on CAT. I won't be able to give you a valuation on this because it's negative earnings for the foreseeable future, and substantially so. Another reason for me why I would avoid CAT. Let's have a look at SOL. Maybe it's working again. Yes, it is. And we are not getting a CAGR, which is interesting. I'm not sure why. Maybe because, let me change that one. Let's go there. So yeah, 2% annual growth rate, which is not spectacular. Probably low chance of hitting such a low target. And we record period. Look at that, just making it difficult for me because it's a July FY, not a June. Target for this one, I think around about 12 to 15 is probably appropriate based upon what's happening here. But in the past, markets paid way more than this. Let's see what the dynamic F says. So that's using a median of 12 there. So I said 12 to 15. So I would say SOL is quite cheap here, I would say, based upon that, because that's quite a low PE to use. That's quite a high hurdle rate. So I'm going to go SOL is looking like pretty good value. And on the chart, you can see maybe that's helping it on the chart. CAT, I couldn't give you a valuation for, sorry. ALC, Alcidion, if I'm not mistaken, is looking a bit like Catapult. Not terrible, but at least we can see a little bit of supply removal through here. So we are starting to deal with this huge overhang, of stock in the system by seeing some demand through here. So that is good. The price action is okay. The candles are okay. I cannot go better than okay on this. On that basis, without it being incredible, I don't think I would want to buy it right here. But if you had it, you've been suffering through it, or maybe there's a reason to try and get into the 20s. But even then, if you had it, I can't even see enough of a reason to hold it, Doug. From Sam, can I take a look at NST? Certainly can, Sam. Let's have a look. Look, a nice little rally towards the end there. So in rallies, look at the angle of attack. Let's go between ALC. Quite flat on that angle of attack, BOE, well, that one's a bit better, PDN, just comparing them, that's a very flat one, isn't it? And then having a look now at SOL, got a bit more traction, some nice price action. I'm trying to just help you compare different charts as you see them, and this is a very solid angle of attack, very steep one, and we've got some nice white candles coming in, so all good here for a hold, I think, to see maybe how far you can get. The problem is I don't think you're going to get all that far. So this is where I would suggest we're going to see some supply. Why is there supply? Why is that likely to be a supply zone? Well, through here, there were a bunch of people that got in. Okay, they got in thinking, that's That's the low, and because NST is cheap, right? For whatever reason, they consulted the PE and the dividend yield or whatever it is that made them happy, and they thought that was cheap. In fact, a few people also got in sort of here and here, and even on this day. Now, those people on this day here, let's be honest, they felt pretty stupid about making that call, and not all of them would feel stupid, but many of them would feel stupid that they bought NST at that level. And for this level now represents for them their break-even point. And for some of them, they will say, well, if, down here, holy moly, if this just gets back up to 850, I'm out of there. So what it does is it creates what we call this concept of latent supply. So not latent as in, come on, the tennis player, but latent supply at this point. And I put to you, why would you want to muck around with it? Why are you wanting to deal with that if you're looking to buy it? No reason. Look how close we are to it. So look, I can go hold on the basis that all of this looks wonderful. See how we respond here. If in this zone you get the black candles, what do the black candles look like? They look like that. They look like that. They look like that. They look like that. They look like, not that one, that one. If you see any of those types of black candles in this zone, unfortunately, I do think you need to run for the hills because of this horrible long-term downtrend. And if you're wondering if this long-term downtrend zone of mine is any good at telling you where the NST rallies are going to end, maybe you might want to just have a little look at those areas there, because it has been pretty accurate in the past. Not 100% accurate, because look here, we went up above, but do note once we were back below it, it was lights out again. Okay, that was for Sam. Maybe Sam would want a quick fundamental on NST. I'm curious, these gold miners, where are they at? Are they expensive? Are they cheap? None of this is going to work because we need to change this back to June, I'm guessing. Here we go. And let's go here and move this one back to here because we've got one. And let's have a look at the earnings per share, so compound annual growth rate. Sam, you'll be very pleased to see that. That's a shock for me. I would not have picked that. So a little bit of a dip in earnings this year. You can see 41 to 26, and then ramping back up nicely, 25% compound annual growth rate over the next 3 Ys. I'm going to say, given everything that's going on in the world in the mining sector, and getting people and maintaining low costs, I think that's going to be tough. That's showing you how it impacts on the valuation. Look, let's fix up the PE first. What would we pay for this one? Look, in the past, they've paid around about 22. In the future, maybe about 20 is probably appropriate. Okay, I think 18 is a little low, but not that low. So maybe I could go 20 given the growth rate. In fact, I could go 20 given the growth rate. I'm going to say it's somewhere between slightly overvalued to fair value. Okay, Sam, that would be my guess. Now, brokers, they don't agree with me, but that's a market. If you believe the brokers, you've lost a lot of money on this. Okay, let me just say that again, just so we're not unsure about that fact. If you had believed the brokers on this, you have lost a huge amount of money. Okay, if you believe my valuation, we're a little bit expensive to roughly fair value, which is probably actually more consistent with the chart that we're seeing. Okay, but hey, you don't have to believe me. You can believe anyone you want, and some of them will tell you that the Easter Bunny is real and Santa Claus is real as well. Hey Carl, can you look? Can you look at Ethereum? Sure can. Now I don't have the latest chart in this platform because I just haven't downloaded it yet. I can look at it, the one from a couple of days ago. It looks great. Great. Looks terrible. Sorry, looks terrible, Damien. But in the long term, in the short term, it looks great. Great enough for me to buy some right here, which is looking okay at the moment. Now, let's pull back a little bit. Let's get the live chart going. But this has got my lines on it, that's all. 2016 would be my next upside target as long as we stay above 1356. Let me give you the live chart. That is not where I wanted to go. I want to go here. You can see that's Bitcoin on screen, and then we're going to go to Ethereum, which is here. I think it's okay. I still think this is this strong demand through here, relatively small pullback. I don't want to see it go too much further into this candle though. That would be a problem. Yeah, I can go a hold. It's not a buy though. I can't tell somebody who didn't get in at this extremely good point to buy it here. I just don't see it. What would change that though, Damien? If you haven't got any you're looking to get in, then you would want to wait for the candle, which I was waiting for as well. So let's zoom in here, and it's that one I've highlighted. So really, what will save this one is a very similar pattern again. So it's this one here, okay, and then if you see that, that's enough for me to get in. Of course, we're talking about it appearing somewhere around here now, okay, which is roughly where we are right now. And then if it was followed up by something like this, then it's happy days. Okay, so we're looking for this candle in and around this zone, and it could be today, it could be tomorrow. Let's have a look at MNB, which is Minbos. There we go, Minbos Resources. Very important. We go back to our default zoom here. We shouldn't be zooming in, zooming out, and then going to the next chart without first looking at that, because it gives us the ability to look at everything in a consistent fashion. We should also be careful with our scale, and that tells me that this one is very sideways at the moment. And yeah, look, the buy is off the table, so straight out buy. As if we looked at probabilities, for me, buy is at 0% right now. Hold is at maybe 20%, and sell is probably still running at about 80% for me on this one. I just can't see it in there. There's a little bit of a rally, but compared to where it's come from, not huge. And even before everything got hit in this sector, it was pretty sketchy anyway, right, for most of this year. So that is not one I'd be looking to get into. Won't be able to give you a fundamental valuation on that, Roberto, because it won't have any earnings. NewCentury Zinc, decent bounce, but again, zinc prices went through the roof. How did this thing not go up? I mean, it must be so operationally toast that it couldn't even rally in one of the greatest commodity bull markets of all time. So what does that tell you? And I'm guessing maybe Lee knows a bit more about this one on the operational side than I do. He's probably having a bit of a chuckle to himself, because I'm guessing operationally they haven't done well. Can I buy it here? No, I can't buy it yet. Lee, what I like to see, and we want to see price action get better. We want to see it get above long-term trend zones. We want to see, short-term uptrends be established. Good price action, all those sorts of things. Is there anything in the volume to suggest that we've had this huge capitulatory sell-off low? Not really. It's not like anybody who was thinking about selling it got out of it, and then all the demand came back in. If anything, we're just getting a rally in line with the material sector in what is a supply vacuum, which seems to be existing everywhere in shares. It just feels like this supply, like people aren't selling, they're enjoying these price rises. A few people are buying. You've got to think, right? Every day of the week, tick, 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 tick. Watch your watch going around. Every day, every second, there are huge superannuation funds, because we're all employed right now. We keep getting paid, okay? And that money, 40, 50% of it, depending on your allocation, goes into Aussie shares, okay? So if you're in your typical balanced fund, X amount goes into US shares, X amount goes into Aussie shares, X amount goes into property, whatever, what is it about? I think it's about 40% is a typical allocation for Aussie shares. So that money is just accumulating in these super fund accounts every day, and the brokers have just got buy orders. So there's just programmed buy orders constantly in the market all the time. Now, that was the case today, it was the case yesterday, it's been the case all the way through. Okay, so that's been the case since superannuation became the big thing back in the Costello era. Okay, so this money is always coming in. It's always coming in. It's always piling in, and it's not necessarily looking at macroeconomic factors. It's not saying, "Hey, there's a big recession coming, everybody, and we need to be careful." It doesn't care. It just has to buy. It has to buy. It has to buy. It has to allocate. It has to allocate. It has to allocate. Now, there are times where supply from active managers and you and I, who are selling based upon our own analysis, overwhelms that demand that is there all the time. Okay, and you get these down moves in the market. Okay, but when that supply stops, because people are just waiting to see what the next big move is going to be, that demand that is always in the system can have a significant impact on prices. Okay, because it always has to buy. It's always hitting the bid. It's always hitting the bid. It's always removing a bit of supply, moving a bit of supply. And when you have that supply vacuum, you can get rallies like this. And this is what I'm concerned about at this point in time, is that much of this rally is not substantial active fund managers coming back into the market. I do know they're nibbling from conversations, but they're not going in whole hog just yet. Okay, and I think a lot of it is being juiced by that passive money that's just ticking into the markets. So I was talking about NewCentury Zinc there. I'm not saying there's any passive money in this one. Quite the contrary. The super funds aren't looking at NewCentury Zinc. Let's be sure about that. But this idea of this broader supply vacuum at this point in time, which is facilitating prices to move back up. And that's why I'm nervous. DRX, I'm not nervous on DRX. I think this one looks pretty good. Diatreme, still the picture of demand for me. The candles are good, the trends are good. I'm happy to go hold on that one. Would I buy it? Look, there's enough in it. If you're looking for a spec right now, and even in the worst market, there are still going to be specs that are going to go. This one's not that bad. I think this is pretty interesting. It regularly gets on my shortlist when I do them, King. Yeah, it does look a little bit stuck at 4, but I'm okay with it. I mean, look, today's white candle looks okay. I think hang in there. I think it's fine. Where would that thesis change? I would want to see it close below 3.2, King. Keep an eye on it. Let's have a look at MFG. Can I buy it? Well, there are some reasonable things going on here. That's as good as my analysis will get on that one. So in that, we seem to be flattening out. Okay, so look at your angle of attack. This is important for you to know this, because we always want to know when to buy these things that have been absolutely belted. I mean, look, this falls into the camp of absolutely belted. All right. So watch the angle of attack change. Okay, and you can see it is really changing here. Okay, it's losing that downside momentum. We've got the white candles coming in. We've got even a little sort of higher swing low through here. We've had some these influxes of volume on these lows. This is capitulation, right? This is just people giving up on this. And look through here, very, very important. And then actually now we're seeing volume pretty low. That's okay, because as we push back up, we're a bit of supply vacuum. So I think the worst is behind it. Does that mean I'm going to rush out and buy it? And that's probably what you want to know. No, I can't buy it here. Look, if you had it, there's definitely enough in it to hold it on the basis that it can trundle higher, maybe into the 18 zone. But that wouldn't be enough for me to want to buy it necessarily, because if we think in terms of reward to risk, it's looking pretty slim pickings from here. Okay, so hopefully that gives you a bit of an assistance on that one. There, Jimmy, I'll have a very quick look here for you, MFG. In terms of the fundamentals, we're going to go to Zip next, which is a great actually segue from this one. And we do have everything here. We've got a EPS is coming down. There you go, still minus 22% compound annual growth rate between the current 217 it's expected to earn this year and the 103. Look at that, it's going to halve its earnings. So, compound annual growth rate, 22% per annum for that many years, you end up halving your earnings. So keep that in mind when we're looking at these charts and these things. That's got to be cheap. These huge fallen angels. There's a reason behind it. Its earnings are expected to plunge. Look at the brokers here, 3 holds, 6 sells. I don't think I've ever seen that. I don't think I've ever seen that on one of these quote-unquote blue chip stocks, but it's normally that brokers are telling you to buy stuff, right, by default. Their price target is still too high, which is not a surprise to me. Let's go risk level. Let's say that, look, I'm going to go low. It seems a little bit weird you go low on a minus 22, but I just think the brokers have probably, already factored that in. You go moderate if you want. I don't think it's going to make a huge difference. But the target PE for this has never been high. So you remember we talked so many times it's hard to give you valuation. These huge disconnects in the past and the present. Like, what do? Do you go 50 or do you go 5? On some of these stocks, I don't know. What do you reckon? Well, here it's a bit more consistent, isn't it? I mean, the overall average there is about 9.6, which is not inconsistent with this. And I think if you went 9 on this. Or if we were really generous and said 10, you're going to find even at a low, it's still crazy expensive under my model. I'm saying it's worth half what the brokers are saying. How about that? And therefore that might temper your enthusiasm on the chart, or at least justify a lack of interest in it based upon that chart. Now this one is going to be super duper interesting because Zip, we talked about this changing angle of attack, didn't we? So we can see here, it's pretty clear, I think, where you're going from here, then you're sort of changing here, maybe even flattening out a little there, then you flatten out completely here, and that's what you want to see. Did we see the capitulation selling? Yeah, we saw a little bit along the way, maybe not as much as the last one, but look at the complete removal of supply through here. Super interesting. Can you play it now? I would say no on the basis of that monster. Candle just kills it for me. If it had a far shallower pullback, one of those control patterns where, big up, small, sideways movement, and then you could trade the next big up. I think the party's over here for a little while, okay? I don't think it's going to plunge back and get down to 50 cents though either. I just think it's probably going to be in a holding pattern. If you missed the excitement, then maybe it's just keep looking somewhere else for the next bit of excitement. The other one was Kogan, which kind of did the same thing, and I won't draw the lines, but you can see how it changed attack as well. Again, that's probably a bit disturbing for me. This is a massive candle. I'd be looking for the opposite of that black candle, somewhere around here, and then there might actually be a buy. And again, with Zip as well. If you see some nice white candles popping in lower shadows around that $1, maybe that's your low point as well. I do believe both of them have turned the corner, so I don't think either of these are going to go back and test those. Break those lows again. They may test them, but I don't think either of those are going to break their lows again. I think they have turned the corner. But MFG, whilst it might have, we haven't seen that convincing demand side response just yet to suggest that it's completely out of the woods. Or do I dare look at Zip here? Just because for you, Craig, it probably isn't going to have any consistency in earnings, which then the model will be able to analyse. No, you can see there. Well, this is the problem with Zip, isn't it? Everybody was so shocked when it went down. Well, if you're not going to make money ever, and don't forget, at times it was supposed to make money here in this year, and look how far away it is now from even making money. It's just like, will this thing ever make money? And maybe it never will, because it'll be taken over by something else to lose money for them until eventually it does. No, not there. There are, I guess, stocks you're really confident on, and you can see the bigger picture, and then there are stocks are just going to be a punt and nothing more than that. And I think Zip falls into that category. BTH, Big Tin Can, look, a commendable rally. You can see it's done a lot of these things we like to see in terms of the price action. The price action's good, the candles are good. We are interacting with that long-term downtrend zone, which is the first step to changing it. The short-term trend is up. That's very impressive as well. And it is a nice angle of attack on that short-term trend. So I'm happy with everything that it's doing so far. Did we see capitulation in the sell-off there? Yeah, look, not bad. And then we're pretty much sort of out of the woods. Everybody's out, and we're seeing a little bit of a push here back up to take out some of the supply. Where is the supply going to be? Well, I think clearly this is a big zone here, and in terms of demand, well, I wouldn't want to see it get too much below really here. I don't want to see it get back below 60. So if you're getting in literally here, I actually think the reward to risk on this is actually pretty good. Roberto, thanks for bringing this up, because so many times we've seen examples today where reward to risk wasn't great, and you go, well, Carl doesn't like this, and I'm not sure, I don't really get why he doesn't like it. Well, you kind of need to see the one where the reward to risk is pretty good to get one, okay? But that's if you got in today, okay? Can you get in today? What do you reckon, Roberto? That big black supply side candle and a follow through shadow today, I don't think you can get in today. All right, so we have to wait and see. We have to, and you don't want to hear this. Oh, wait and see. Just tell me buy if I can buy it. Well, no, you can't, because of the candles. It's telling you supplies in the system. Why is there supply in the system, Roberto? Well, look at this. Has this trend zone been good at killing rallies? You betcha. So we can't buy it here. And if we end up having to wait, well, you see, if you waited for, say, the candle up here, it changes the reward to risk, doesn't it? Because you had sort of that sort of upside, and if you're getting in, say, here with your demand down here, now your reward to risk isn't there. You know what I'm saying? So your entry becomes crucial, but you don't necessarily have to wait for it to get back above there. I mean, that would be a conservative way of doing it. You could go for the awesome candle in here as well, right? Sort of X marks the spot for your awesome candle. And what does your awesome candle look like? Well, we know what it looks like, because I've told you a million times. It looks like this candle here. So if you saw that, Roberto, in that zone where I've drawn the little X marks the spot, and it looks like this, then you can get in with some confidence that demand has returned, but with a far better reward to risk. You get what I'm saying? Because now we're in here, yep, there's my upside, and now there's my downside. And we've ticked that reward to risk box. But as I said, we have to wait and see, don't we? We have to wait and see. It's not there yet. And this is the market where you're going to be forced to make a decision every day. Do I go for stuff that looks okay, not quite there yet, or do I show some patience and wait for the confirmation? And I've already told you how I feel about that right now. Unlike many tech stocks, Roberto, hooray, this one actually looks like it's going to make some money sometime soon. So that is encouraging. I'm going to keep moving. I won't do the full workup because I have to change a few formulas here to make this one work. Okay, but let's just say at least it's going to make some money. 182 times next year's earnings and then 34 times the year after. Now, I want to finish this out. I've literally got one more to do and then we're done, and that is GOR. A spectacular bounce, just in terms of angle of attack. Wonderful candles, wonderful price action, excellent. We've got above the long-term downtrend, tick, 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 tick. All good stuff. Short-term trend, capitulation, sell-off. This is looking actually very good. Okay, would I buy it today? No. Ditto on Bigtincan in terms of what we want to see in the price action. Today's not bad at all. If it pushed above here, I think you can just add some of these. Yeah, I think you can take a bit of a position. If we saw that magic candle that I showed you in the last one, and we saw it sort of in and around here, even better. Okay, that could be your entry signal there. So might get a little bit of a pullback and then a little rally through here. But if it hooks higher, yeah, this one, I think you can take a very, very speculative. Why very speculative? Because let's face it, it's a turnaround play. It's not bottom left, top right, okay? And we're looking to target those higher retracements. Where are they going to be? Around here, okay? So if we're getting in somewhere around here, and where's the demand? Probably somewhere down there. We're at least making one. In fact, you probably go a little bit higher, maybe there. If you're looking to sort of set a stop loss somewhere beneath that level, you'll have your one-to-one. That is it for the analysis. Let me just quickly wrap up here by saying, hey, if you're watching me in the recording, well, thanks for doing so, but come and join us live at 1 p.m. next Tuesday and get your portfolio questions answered. There's the link. Head to the website for further details. Head to the website for further details about our incredibly, fantastically amazing product offering. Of course, over 4,100 securities to trade. We've also got CFDs, trade long and short trade commodities, indices, crypto, whatever you have a view on. For our ASX equities trades, $8 flat rate, that is CHESS sponsored. 24/7 customer support, some great apps. We've got a new one just released. And of course, you get my analysis as well. We do have a special offer going on at the moment, a bonus 10 free trades from the existing offer, 20 free trades to get you going for new clients. There are some terms and conditions, as in you need to use them by a certain date, but pretty simple. Ping that email address for more details. If you're an existing client, call your friends, get them to come over to us, and you could get up to 1 year's free trading, T's and C's as usual. If you are watching me on YouTube, hit the subscribe button to stay notified of any new video updates, and of course smash the like button to let us know you love what we're doing, so we'll continue to do it. Apart from that, it has been a pleasure chatting with you today. Hopefully you got lots out of it. I wish I could have been more decisive in some of those calls, but that is just where I think the market is right now. All the best until we catch up again. Bye bye.